First of all, I've got to ask, because we have seen all year long stocks rising in tandem with precious metals. This normally doesn't happen. Explain to us why that phenomenon is happening this year, if you can.
That's the harder question. Why? It's the key thing is this, gold is basically grabbing alpha in a significant way. So it's up almost 70% on the year. S&P 500 is maybe 20%. So it's way outperforming. I think part of it, the main thing was the main trigger was 2022, Russians' invasion of Ukraine and some of the issues with the dollar. But gold just absolutely loves our new president, Mr. Trump. He's pushing back on the Fed. Potentially creating more inflation, running it hot. It's all good, and his volatility is all good for gold. The significance I look for in gold, and I was looking forward, is you mentioned how extended it is, how stretched it is. History does not really bode well for new longs at these levels. One good example is silver. Its peak, it closed in 1979 was 32, and this year's low was 28.
So we have Goldman Sachs among the several banks who predict that prices will keep rising in 2026. They're issuing a base case scenario of $4,900 an ounce with risks to the upside. Do you see more runway for growth for gold here, or are we going to see maybe a correction soon because we have kept on rising higher and higher, up around 60% this year?
There's an old saying in markets, you're supposed to be selling when they're yelling. That's the inklings I got in cryptos last year, and that kicked in this year. And I'm getting those inklings in gold and silver now. Now, I've been bullish forever, but there's never wrong where you can say take profits when it goes parabolic. So momentum could easily carry it to 5,000, but a normal correction from such stretched levels, baby, it's almost 100% above its 60-month moving average. This is the most since 1979. Could easily get gold back to 3,500. That's just how it works and has worked in history. So I look at gold here as just absolutely frightening for what it means. To me, the implications of gold going up at this high velocity and crude oil going down at this high velocity is potentially global deflationary inklings and potentially signaling a down year for the S&P 500 next year.
But I'm looking at sort of everything around the precious metals, like geopolitical tensions, the things that would make people sort of run to the quote-unquote safety of these precious metals. I feel like 2026 has a lot of geopolitical tension, Mike, I got to tell you. And I think that maybe that could be a tailwind for these metals, don't you think?
Oh, well, absolutely. You're describing the current bull market, things we talked about 5 years ago, things that were happening. But the bottom line as a commodity strategist now is just look at the lessons of history. Once you get to these levels, everybody points out the fundamentals. There's always good reasons. But you have to flip over to your risk management hat and say, do you realistically think the relative value is good for getting overweight long at these levels? And it typically is not. So I'm very concerned. One thing that's never happened in history is we've never had gold rally at this velocity, almost a 100% difference versus 60-month moving average, with stock market volatility staying this low. That's never happened. That to me is, I think it's going to indicate next year. Is that stock market volatility, 120-day volatility at 11%, which will be the lowest since 2017. It's just going to pick up and get to its average next year, which is closer to 20%. Not a big deal, but that might seem a big deal when the market corrects. So that's the signals I'm getting. It's just purely frightening.
We've seen gold-backed ETFs seeing inflows rise week over week in the past, I think, 1 month. But you know what has seen outflows? Bitcoin ETFs. And I know you also write about Bitcoin and crypto. Can you talk to us about your outlook briefly for next year? What are we expecting in that asset class?
So I think Bitcoin's more likely to revert back to its enduring mean around $50,000, which has been the case on the annual charts since 2021. I don't think it gets much above 100,000. It has the curse of the best backtest in history and the biggest ETF launch in history. And now we're finding out the realization of what happens with a great backtest. Usually that means the best is over. The thing about Bitcoin, it was one cryptocurrency in 2009, and now there's 28 million. So it's basically the whole cryptocurrency space is a bunch of pigeons versus 4 doves, which is gold, silver, platinum, palladium, and precious metals. So that to me is what's happening. The bottom line, I think, for cryptos next year is the stock market absolutely has to go up, or that Bloomberg Galaxy Crypto Index, which is down about 20% on the year, which is the same price since 2021, will probably continue to drop next year. I think the whole space is just getting overhyped, got a little bit too bullish, and I'm fearful the precious metals are getting a little bit overhyped and a little too bullish now.
So, Mike, as you look into your crystal ball for 2026, which precious metal has more runway in your opinion?
Well, I think gold's going to continue outperforming virtually all commodities and versus its own stock market, but this time potentially with the stock market going down rather than going up. So the key thing to remember about gold is always outperforms almost everything except maybe treasury bonds when the stock market's going down. And to me, that's the biggest risk for next year. It's not in anybody's model. It's everybody's assumes the stock market's going to be up 11%, which means it better be, or we got issues. And the ratio between Bitcoin and gold has been a key indicator this year. It's dropped to down about 19 ounces of gold per 1 Bitcoin. That's the lowest level in almost 2 years. That's a good leading indicator. It's pointing lower. I think that ratio is more likely to go to 10 than anywhere get above 30.